All right, Caleb, is right now the time to buy a house? I don't like to make predictions per se, but is right now the time where people should really be gearing up to get ready to start making deals and making offers on homes?
It's a tricky question. Me and my wife are currently under contract on a house, so I personally think, and in your given situation, it can always be a good time to buy.
Okay. And that's something that we'll talk about here shortly. I think one of the things that I appreciate with what you've said in the past is, the only time you lose is if you have to sell the property. If you can hold on to it, whether that be for, your original plan of, 3 to 5 years or whatever, or the market is kind of where it's at right now, where we'll get to a percentage of homes that sell under list price. It's maybe a little bit softer and you got to turn it into a rental and you could become those accidental landlords, which we just had a listing that just did that. They were aggressive on their pricing or price reductions. It was just a very unique house. And it got to a point where it's like, okay, this just makes more sense now at this point to turn it into a rental. I can cash flow because of the debt service on it. Like, I'm just going to hold it and I don't have to sell. So I'm just going to hold it. But I talked with Izzy just the other day and I was just kind of like, man, I'm not a big, it's the right time to buy. Cause I think the timing is, like you said, kind of in each individual's person's situation of like, what's your game plan? What's your goals? What's your timeline specifically? And then from there, is it a good time to buy or not? That's kind of up to you. But I don't know. I kind of think right now, negotiations, as we'll see here very shortly, are very strong in favor of buyers. Specifically, this is the Northern Colorado real estate market that we're talking about here. But also, interest rates are expected. Like, I don't know what the probability is right now. I didn't look at the most recent probability of a rate cut in September, but it's looking to be pretty high, especially with those numbers that came in, which one of our mortgage lenders suggested that we will see the 30-year fixed mortgage react probably about a month in advance. So mid-August to end of August, we'll start seeing that 30-year tick down. And we've got, Ashley, who's been sending us some of our most aggressive rates. And I'm seeing some in the fives, with maybe a little bit of points, but some in the high fives.
Which is fantastic. Been a while since we've seen that.
Totally. Especially like, I know you just refinanced one of your properties and got I think went from 8 to 6.5 or something like that.
Basically 7.825 to I think 6.025. So a big drop. Huge drop on a refi.
Well, let's jump into just some of the hard stats. Okay. I'm going to share my screen here. We'll look at some of the lagging and leading indicators for the market. And then we're going to jump into, I just spent, like I was talking to you and the team, like 4.5 hours diving into some of the sales statistics of the last 115 homes that sold in Fort Collins. And it's really eye-opening. So make sure to stick around. It won't be at the end, but it'll be, close to it. So I will add this to the stage. Median sales price. This is for both attached and detached buildings. And this dropped, a pretty significant decrease. And if you look at it, it's actually important to know that this was July. Because if you see, let's see here, in 2023, July is still increasing. Here it had a little bit of a drop. In 2024, it had a little bit of a drop. So some of our peak pricing is going to be in June. So it's not unexpected, but it's still, interesting. The biggest thing to take note is, what's up, Fernando? Thanks for joining, man. The biggest thing to take note of is, I think, attached dwellings. I know you've got a listing right now that's on the market, priced well, priced at market, and it's just sitting. You've had great feedback, great activity, but people are just not making moves. And, that just 15% decrease from 1 year ago, median sales price. And let's look at the 12-month rolling average. Even that's dropped 1.7% from 1 year ago. So, we've seen some really flat prices since November of 2022. Well, I should say December of 2022, relatively flat prices. And it's the townhome condo market is really, really slow right now. It's a need.
Yeah, it is pretty soft.
Attached dwellings, they're doing fine. They're down 1% from 1 year ago, flat versus last month. But they had a steep decline as well. Still 624 median sales price, down 2% from this month 1 year ago. So all that to be said, it's just a really interesting market for properties. We'll get to see, homes that are selling, but let's look at new listings for both property types. Up 10.7%. One of the things a lot of articles are talking about is the relief of the golden handcuffs. You're going to see sellers that have been wanting to sell for 3 years, but maybe had because we've been at 6.5% interest rates since June of 2022. So we've been at 6.5% interest rates for more than 3 years, which is wild. And people's life circumstances still happen. And so those golden handcuffs are just people saying, you know what? It's now or never. It's crazy. It's crazy. I know you've got young kiddos, Caleb, or what? Excuse me, young kiddo, and then soon to be kiddos. Congratulations.
Thank you.
But you do start to make, I found, you do start to make decisions because time starts to get constricted, right?
Yep.
My daughter's 7 and we bought a cabin last year and it was a really uncomfortable purchase for myself at that time. I didn't want to, it wasn't the right time, but I looked at my daughter and I was like, you're 6, you're half of the way through your life that you think I'm cool. So by the time she's 12, she probably won't think I'm too cool anymore. And a third of her way through her life living with me. And it just really hit. So I think that life and time start to move relatively quickly. So 3 years is not a short time period. And people, whether they were waiting and have been waiting, are kind of like, you know what? If I wait 3 years, I might wait 5 years. And if I wait 5 years, I might wait 10 years. And if I do that, I might never do anything. So I think there's definitely this push of people wanting to get on the market. So that's 10.7% up versus last year. This is interesting too. Our demand though is down with detached dwelling units significantly. 24% of fewer homes are under contract this month than 1 year ago. As you saw, our single family, our demand is still strong. I think people are still very much active in the market, but this attached dwelling, it is showing some softening on the attached dwellings for sure.
Good time to be a buyer though. There's always a silver lining.
Oh, I think right now, like I said at the beginning of the show, I think if I'm seriously considering buying in the next 2 years, now might be the time that I get pre-approved. I seriously start looking at the market. And as you'll see here shortly, some of the negotiations can get pretty extreme. So closed sales up 6% versus last year. So demand picking up, but again, dwellings are down, but detached are up quite a bit. Days on market. Now this is going to be interesting because one of the things that I looked at, our homes are sitting. And I do think this is, we're up to 44 days, which is still really quick, but I'm going to have to imagine this is still going to increase more and more as we get into fall, and unless interest rates plummet. If interest rates plummet,
I think you're right.
This market's going to go wild. But
with seasonality, even if it just takes down, I don't know that it's going to be enough to substantially change that. I think it's going to elongate through winter.
Yeah, for sure. Look at that. 73 days in January of 2024.
Yep.
So we're kind of at the bottom. As far as seasonally May, June, July. So we're going to start to see days on market tick up. Just that's seasonally expected. But I think we could see that really tick up quite a bit. All righty, let's look at 10-year Treasury. That's kind of what we keep our eyes on as far as it kind of is a leading indicator for the 30-year. I saw it dip to 4.1. It's really just kind of hovering around that 4.2, but I think that's going to be coming down here sooner than later. But this is what I wanted to jump into today, that I spent a lot of time on. And can you see that decently well, or do I need to increase it quite a bit?
That's better. That's good.
All right, let's do that. Okay, so this is over the last 2 weeks. 182 homes, both attached and detached homes, came onto the market. 163 are still active. So 90% of homes that came on the market in the last 2 weeks are still active. And, which is really, it's a different feel. I guess that's the best way to put it. It just feels different. Like that first weekend was always the most important weekend over the last 5 years. And now I don't think it's not unimportant. I just think that buyers are absolutely taking their time.
Yeah. Very much kicking the tires, seeing what's out there, dating the house and coming back a couple of times. There's not a lot of sense of urgency.
Yep. 19 homes are under contract. Of the homes that are under contract, the average price point was $709 and median price was $679. I was kind of expecting that to be lower, honestly, when I saw like what homes are moving, what homes are going under contract. But that's not necessarily the case. There are obviously, as you see, $1 million homes that went under contract within, the 14 days and, cheaper homes as well, 390. Yeah. So, now when you look at sold properties, there's a lot of information out there. Like right now, Denver's leading one of the leading markets of price reductions. Over 32% of homes in Denver are seeing a price reduction prior to selling. And then they look at the difference of when a home finally goes under contract and the final sales price versus the last list price. So that's kind of how they determine are homes selling at, above, or under list price. But that's not the full truth. So let's look at this. If you just look at the 116 homes that have sold over the last 2 weeks, which I think just really important, quick note, 116 homes sold, 182 homes came on the market. So you can see that inventory starting to to check up a little bit. I mean, that's 70 extra homes that are going to be on the market that buyers that are starting today are going to get a look at and have to compete against as far as sellers go. But still, 116 homes that have sold, 64 homes sold under list price, or about 55%. Only 12% of homes sold, 13% of homes sold above list price, which, is still interesting to me. I'm like, even in this market, when there are tons of homes, those homes that are just priced well, good neighborhood, turnkey, like they're going with a lot of demand. So there are, I think, very educated buyers out there right now, because I think they're spending more time in the market looking at homes on Zillow, on realtor.com, on the MLS search engines that get sent their way. I think buyers are pretty educated.
Oh yeah.
At this point, I think they, it used to be you'd get approved and you'd go out and you start hustling to try to find that house right away. Well, now that buyer timeline might be, instead of 30 to 45, or let's just say 45 to 90 days, it could be 60 to 180 days. And that just means more time on the market, more understanding of what's moving. Maybe you've seen multiple houses come on in that neighborhood, one slipped away. And so this new one that came on, you got to move on it quick.
Yeah. And you talked about turnkey houses having a premium. I feel like with the buyers that I'm representing right now, I've also seen more houses not turnkey, needing projects that I have in a long time, whether it's people needing to sell and they held out as long as they could, like you mentioned, or if life just finally dictate and kind of forced a hand. We've been through a lot of houses that feels like there's value add components, but sellers don't want to give a big enough premium that buyers are really interested in those projects.
Yeah, agreed. And it's like, it's tough because, there's those projects that you want to do. Maybe you can't afford to, or maybe you're still living in the property. And there's a lot of just different challenges, but you've got to be willing to give a deal right now. Here's what I really wanted to spend some time on today.
Yeah.
So this is what I went into, and I looked at the 116 homes that have sold. And let me, I'm going to zoom out just a little bit so everyone can see everything that we're looking at. And then I'll zoom back in. But this is including concessions and price changes. So, one thing here to look at is, let's go to Z-Day. There was one home that had 10 price reductions, 9, 8, 6. But most houses are going to have, single digits, maybe 2, 3. And And a lot of those are going to be on the lower price points. A lot of the upper price point homes aren't going to have too many price reductions, but on average, 1 to 2, price reductions is all you're going to really see. But here are the true numbers. So if you are, and why this is important to you, if you're watching this, is both as a seller, like what to expect. What are your expectations when you are negotiating? Like your listing agent might be telling you something, and that could be because, they've got rose-colored glasses. But the reality is the negotiations are what the market's going to dictate. And as a buyer, this tells you, hey, like if a home's sitting on the market, what are my negotiation powers? And so 80% of homes, if you include concessions and price changes, sold for under their original list price. 80% of homes. That's wild.
It's really significant.
13% sold, 13.7, 14% at list price, and that's at original list price. So those are those ones that only 16 of them came on the market, went under contract, sold at list price, and still 7 homes sold above list price. So much, much smaller. If your buyer agent is now, hopefully you're going through a buyer consultation and they're taking you through the current market dynamics, what the expectations are for negotiations. But let's say if you make an offer on one house and you go above list price because, well, hey, you know what? And for, God knows you don't get it for whatever reason, that was probably the right call. But if you kind of hear this tone of we should be going above list price, the market's hot, like run for the hills. Like right now is the time to negotiate.
Yep.
Now I will say some of these concessions, let me show you here. Some of these concessions are inspection items. So this wasn't like this house sold at list price. It was listed for $625. It sold for $625, but during inspection, they negotiated $600 for whatever, Some GFCIs weren't properly installed, or, a fire rated door needs to be installed. So they negotiated. So my guess is probably up to, this, depending on price point, of course, but, up to about $2,000 to $3,000. That's probably inspection items that were negotiated. More than that, when you get more than that, that's going to be a negotiation for closing costs, rate buy downs. And so you can see that, there's some significant concessions. That's $25,000 on a $500,000 house. That's 5% going towards concessions.
Tells you sellers are trying to be creative to move properties if they really need to.
Absolutely. And as a buyer, like what makes sense for you if you're buying this house? Like I have a friend right now that we're working with. They don't have a lot of money for down. Like they just don't. Like they are going to be, and then when you can take into consideration closing costs, like they're going to be like house rich, cash poor. But what if we can come in here and negotiate all closing costs paid, and hopefully some off of the sales price as well. Maybe they can keep in their pocket $25,000 while they move into this house and feel a little bit more comfortable for the ebbs and flows of the market.
Totally agree with that.
But yeah, so quickly, 80% of homes under list price, 14% at list price, and 6% of homes above list price. So understand what your negotiation, powers are. And here's important numbers too. These numbers got switched up a little bit because of me playing with that, but it's still pretty close. This was actually 6% and this was 4%. If you are negotiating a home to get under list price, those are numbers that you can play within between 4 to 6%. Like, hey man, I think it's a very realistic conversation that we should be able to get this house under list price by 4% or 3%, and then still negotiate on inspections another 1%. But between 4 to 6%, I think is very doable right now.
Totally.
And that can be separated. I think was it you, Caleb, that you were negotiating with a buyer and you were able to get, or maybe it was Izzy, but you were able to get $35,000. You offered $50,000 off of or $60,000 off of a $600,000 price point. So 10% off of $600,000. And they came back to you and said, hey, listen, we'll give you $35,000.
However you want. That's great.
However you want. You can take it as the purchase price, lowering the purchase price, or you can take it as a concession. I don't care. You can take $35,000. They got the property, put it under contract. It's a great deal for them. They were aggressive, came in at 10%, got a good counter, agreed to the counter. Maybe they could have got a little bit more aggressive. Not saying they could, but I'm saying, that's pretty decent. That's above 5% from sales price. So that is your negotiating power currently as a buyer. And if our inventory continues to tick up, which right now it's at 3.5 months, up 17% from 1 year ago, that's just going to increase your negotiation powers as a buyer. Now, I will say that inventory can increase quickly and decrease quickly. So I am absolutely watching interest rates like a hawk right now, which is probably unhealthy, but whatever.
Do you think that's going to be enough with us hitting our slow point in the season anyways to keep stuff trucking? I feel like it's going to take a significant dip in interest rates to balance out that fall supply that starts to really slow down.
Well, the title of the thumbnail is the fall market going to be hot? And I think it is. I actually think the fall market, if interest rates get into the high 3% for the 10-year, which would then subsequently be 5.5 to 5.75% for 30-year. I think if we consistently dip below 6%, I think you're going to see an onslaught of buyers onto the market. I think they are waiting. I think they are patient. I think there are people with money that has been building. One thing that I wanted to show actually real quick, here's what's important to know as well. If you're a buyer, who are you competing against? Okay. And that is, let's look at what is Redfin telling us. Who's moving into Fort Collins? People from Los Angeles, Denver, Dallas, Chicago, San Francisco, Washington, Austin, Seattle, Houston. Those are all markets that are much more expensive than Fort Collins. So those are the individuals who are buying homes here in northern Colorado, or where people are moving from. Not to say that all, because there's the majority of people are still buying houses are from Fort Collins. These are just people who are moving into the area, but these people are flush with cash in comparison to people that are from Fort Collins. Maybe they just sold their Fort Collins home and are buying another Fort Collins home. Well, they're going kind of horizontally, right? They're buying they sold a 600,000, they're buying an 800,000, but still it's a value increase for them. They got a better house, but it's still just as much maybe price per square foot. Whereas maybe somebody's coming from Los Angeles and they sold a $3 million house that was $1,200 per square foot, moving to Fort Collins and buying a $275 per square foot house. Just, you got to understand, I think that's who we're competing against. I think there are a lot of people on the sidelines that have got money and are ready to go. And I do think that when interest rates drop, which could be soon, I think it's going to be enough to turn this market on. I mean, we talked before we went live that I keep on jumping back and forth. We talked before we went live. Let's look at, I want to show the sales price of a residential detached house on a 12-month rolling average. Being flat since November, December of 2022, that median sales price on a rolling 12-month average was 610. We're at 615 right now. I mean, we've been flat for 3 years, which I want to go. I should bring up this video of my predictions. It's crazy I'm making 2 predictions, but in my 2022 market predictions, or maybe it was 2023, I hoped, this is exactly what I was hoping for, is a plateau, not a decrease, not a slope, but a plateau of prices while incomes had an opportunity to catch up. I think we've had our plateau. I think 3 years is a significant enough plateau to where if interest rates come down, prices are going to increase.
I agree with that. I think interest rates are a big lever that a lot of people are watching right now.
All right. I've got some things I want to talk to you specifically about, get your kind of hot takes on them. Let me just pull this screen up. Okay, here we go. One of the things that old Donnie's talking about is capital gains, okay? And removing those from the sales of homes. Do you think Do you think that's significant enough to move homes?
Not necessarily, because that's already in residential real estate, something
Agreed.
that's considered after a couple of years. So I think it's noise more than a needle mover.
100%. $250,000 for an individual, $500,000 for a couple. If you are married and you're worried about capital gains taxes after $500,000, now don't get me wrong, depending on markets, of course, that might be different. I mean, maybe that's what they could change is market-based capital gains. You know,
and they've got that for jumbo loans and other products, so that kind of makes sense.
But I don't think, like in Fort Collins, a $500,000 capital gain. I mean, there's not many $500,000 houses that you bought. You know, I just talked with somebody at the gym yesterday. He built his house in Miramont for he bought the lot for $50,000 or $35,000 and built the house for $400,000. So that's a $400,000 house that today is $1 million.
Yep.
So maybe 1.1. So he has a $500,000 gain on that house, tax free. So worst case scenario, he's paying taxes on like $50,000. He's married.
Right.
So I don't think, for at least Fort Collins, Northern Colorado, that's not a needle mover.
I totally agree.
Interest rates, I personally think they're going to be coming down here September. We're going to see our first cut in a long time. What are your thoughts?
There's already been a little bit of downward motion on some of the mortgage rates and a little bit of downward noise. I think, like you said, the market's going to be ahead of it. And actually, I'm thinking it's starting to get ahead of it now. So I think rates are going to trickle down a little bit through August and then probably stall out. Even when we see the cut in the meeting, they might trickle down further. But we'll probably wait for the announcement of the meeting in terms of what the sentiment is, which I think is still going to be downward for longer through the fall.
Yeah. It'll be interesting. You know, it's definitely something to watch. Like I said, I watch it probably too often, and it's something. It's an unhealthy habit of mine right now. Bitcoin and real estate. Now, I don't know a lot about this, but apparently Bitcoin now can be used. It's always been able to be used for some things, but I believe now it's essentially being able to be used as like collateral, not collateral, capital as far as assets. If you're watching this show, comment below, let me know all the ins and outs of it. But I mean, you know, Bitcoin seems like it's here to stay.
Absolutely.
And could be a huge liquidity event for the markets if people who own Bitcoin can leverage that to buy and use traditional financing with that as their asset base.
Agreed for that. And it's not an asset that I understand, but it's clearly got longevity to it. It's seen, everyone always says, look at Bitcoin and how crazy overpriced it is. And then we always see incredible market gains. So even though I don't understand it, it's going to stick around. And I've got questions on the practicality of that when it comes to financing. But I think the people that are understanding crypto and are involved in crypto do have good funds. And so I think it's a healthy percentage of people.
Yeah. So, I mean, obviously there's the Bitcoin millionaires that have bought house with Bitcoin, all that kind of stuff. But there's also people who might own a Bitcoin right now is I think like $112,000, but maybe that they own half a Bitcoin or 3/4 of a Bitcoin. So that's essentially $50,000 or $75,000 that from previously they weren't able to use as, assets on their balance sheet, but for banking purposes, but now they can. So I think that might actually be a decent liquidity event for potential buyers, especially because people who own Bitcoin, millennials, Gen Z.
Yeah.
I mean, not many boomers. And so who are in prime home buying ages, millennials and Gen Zs. So I think there could be some pretty significant, liquidity with that.
Nice. I like that.
Let's see here. Buyer behavior, pent up demand, but still picky. I wanted to give a quick story of we had a listing that we had a buyer come in. They offered 6% off list price. We countered at 3.5% off list price. And the buyer told us to essentially kick rocks. And we came back to them and said, okay, fine, we'll take your original offer. And he said, nah, I think we're good. We're going to move on. Now, the good thing is I do have a mentor that taught me early on as a listing agent, you really want to smoke out a buyer at the beginning. That buyer, if they were as kind of wishy-washy as that, not accept. I mean, this was within 12 hours I'm talking about. So it's not like it came back to him a week later and then his life changed. It was 12 hours. And the good thing is we didn't go under contract with this person, tie up the property for 30, 45 days. all
Right.
for him to terminate at the end. So it's probably a good thing, but it did suggest that, hey, like the buyers know that they've got power right now. So,
Right.
and then my understanding was after talking with the buyer's agent that buyer went and looked at new builds. So new builds right now are offering tons of incentives, interest rate buy downs. They've got a ton of inventory. I think 9+ months of supply for home builders across the United States. So they want to offload their properties.
Oh yeah, their carrying costs are tremendous. I don't think people realize that. Every day that a builder sits on a house really hurts them, so they'll do anything to make a deal.
Have you watched any of the Nick Gurley reventure real estate stuff on YouTube?
I don't think so. I don't think I know who that is.
I always talk to people who send me stuff. I get stuff sent to me all the time from people, like especially from Reventure and Nick Gurley. I really like his data. I don't like his brand. His brand is doomsday, and even if all signs are leading to rainbows, he's going to tell you you're leading to a pot of shit. So like that's unfortunate, but his data is phenomenal. And one of the things that he talks about is, ghost inventory and shadow inventory. And those are people who want to sell but can't sell, that isn't necessarily on the market. And what we talked about a little bit earlier are sellers who aren't able to sell and who pull their property off and then turn it into a rental to sell down the road. So that 3.5 months inventory that we saw just a minute ago would probably be quite a bit higher if we included the demographic of sellers who want to sell but turn their properties into rentals.
Yeah, totally.
So that does, which is, it'll be interesting as far, the rental, we could go on an entire episode for rentals, and we probably should, just because I think it's important to talk about that. But, people who are selling houses right now, financially, it doesn't make sense to turn them into rentals.
Right.
Sell me a $600,000 4-bed, 3-bath house in Fort Collins, and I can rent it out for $2,500, maybe $3,000. But those numbers with the debt service that I have on it don't jive.
Yeah.
So the only option for that house that was a rental is selling to a homeowner.
Yep.
Which removes rental inventory and increases rental demand. The supply decreases, demand is still there, prices for rents increase.
Yep.
So I do think that that's probably going to be a benefit to for rent properties, is those shadow inventories of homes that are getting pulled off. They've got the 3% mortgage rates. They've owned them for 7 years. The debt service is simple, or not simple, but low enough to where rents make sense. So that could be a benefit to the rental side of the market.
Right. But I think those other people, the ones who have 6, 7, 8% mortgage services, debt services, they're not going to be able to do that. So they're going to sit and they're going to take hits and they're going to take losses or get underwater. There's some tricky spots.
Sure. But the conversation that I would have, and I'm curious your thoughts on this, if I was, let's say I was talking to a seller and that's what they were considering. It's like, hey, shoot, we need to sell, and our mortgage is $3,500, but the best I think we can do is get $3,250.
Right.
All right. So your negative cash flow $250 as a rental, which is never a good thing. I've only bought one property that had zero cash flow, but I've never bought a property as far as the investment goes with negative cash flow. But I would have a conversation with that individual or that homeowner, and I would ask them. I would say, well, okay, is it better that we turn it into a rental, maybe get into the spring market, a little bit more activity, maybe interest rates come down, maybe the market softens even more? So like there's risks on both sides. So you got to take that into consideration. But is it better to write a check each month for the next 6 to 7 months for $250? So roughly, $1,500 or so, or cut your property right now by $30,000 to sell it.
Yeah.
When maybe in 6 months, when we get into the spring market, interest rates go down to the 5s, you could sell it. Instead of losing 30,000, you lost 1,500 and you're ahead. So that would be a conversation you need to have with yourself. It's like, it's not fun to write that check, but is it better than cutting $30,000 and versus waiting, 6 to 8 months?
Yeah. Kind of depends on where you think the potential of the market's going and your personal situation, honestly.
Totally.
And what your prognosis on real estate is long-term.
What's that?
And what you think about real estate long-term. If you think that's
right.
going to rebound 10 or 30 years, then by all means, write that check.
Yep. Let's see here. You only lose if you sell. So again, the market in Northern Colorado, businesses are moving here. All the demographers are saying the area is moving. So if you can hold on to it for a long enough time, you'll do just fine.
Yep.
Okay, last few things before I let everybody go. Now, make sure if you have any questions that you're asking them, and if you guys are interested, if you guys are interested in moving to Fort Collins, Northern Colorado, buying, selling, or investing here in the area, give my team and I a call, text, or email. We'd love to help you guys out. Have helped hundreds of families relocating in the area, and of course, tons and tons of local families as well. Caleb is absolutely crushing it this year. Very in tune with the market. And this is why we do this each month, to really stay on top of what's happening so that we can do the best that we can for our real estate clients. Okay, what else is impacting the real estate market? Affordability is still the biggest conversation. People are having a hard time. I think I made a post on Facebook about the county fair. Cost me $250 to go. That was a lot of money. And, everything's more expensive right now, including houses, groceries, utilities, gas, all that kind of stuff.
Totally.
New construction is definitely a wild card. As far as a seller, you are definitely competing against new construction right now, whether that be townhome, condos, whatever. So you're going to have to differentiate yourself because they're able to offer significant incentives, interest rate buy downs, and have a lot of inventory for buyers to choose from. Mm-hmm. Inventory is still relatively low. We're at 3.5 months. A balanced market is 6 months. I've never seen a balanced market. Last time there was even close to that was 2007 and 2008 in Fort Collins. But we are ticking up that way. Investor activity. Definitely, I'm seeing fewer investors. 1031 money absolutely makes sense. A cash allocation or a capital preservation play does make sense. But there's no cash flow plays right now.
Absolutely.
The yield,
not residential real estate, not at all.
The yields don't make sense. So investors are a lot of these properties, owner occupieds are really who are looking.
Totally.
Let's see here. How do you feel about the economy just in general? How do you feel? I talked with somebody yesterday about it. How do you feel about the economy in general?
I think kind of the same sentiment over the last 6-ish months, ever since Trump got in office. I think there's still some uneasiness. I think things have started to level out a little bit, hence why you see some downward movement with some of the interest rates. And I know there's been pressure from the office and some other places for that. I feel like we're going to be in a slow and steady path really through this whole winter. So I'm not exactly bullish that things are going to take off, and I'm not bearish that anything's going to fall flat either, especially in the real estate market. I think things are going to keep kind of trudging up and to the right real slowly for a while. So 1 to 3% in a lot of metrics. The stock market in a couple places has started to slow down and stall out. There's some different sentiment for sure, but a lot of that I think is going to be relieved a little bit with interest rates and just slowly grind through for the next really winter into spring.
I just wish we had something boring, just boring. I always joke with people, my favorite closings are boring closings. Well, I am coming to believe my favorite economy is a boring economy.
Watch out. There's another virus in the news. I saw something.
Oh, wonderful.
I know.
Some final thoughts that I've got, and then I'll let you give some final thoughts as well, Caleb. But, I would say we're definitely moving into, if not already in, a buyer's market. So if you are a buyer, it's a great opportunity to really get aggressive, find the home, be patient. Sellers, you definitely need some strategy and patience. I will say it was interesting looking at a lot of those homes. They'll sit and they'll be patient. Don't go too aggressive on those price reductions because you got to give time for the market and buyers to come into the market to look at your house. So strategy and patience. Definitely don't overprice your home right now. And then buyers, have some conviction and flexibility. Be confident in what you're offering. If you don't get this house, there'll be another house. That's for sure. So be convicted in what you're negotiating.
Yeah. On the buyer side, finally feel free to take a shot that you didn't get to take for the last 4 or 5 years. The last couple offers that I talked to you about, I think we've offered $40,000 and $60,000 under asking prices respectively, because that's truly what a buyer feels a property is valued at and what pencils. We talk a lot about affordability. If that pencils for them in terms of their affordability and their monthly payment, go put that offer in. Sometimes we have to adjust the seller's temperature a little bit over time. They've got to see the market shift.
Totally. And one thing to consider too as a buyer is there's nothing to say. Now, obviously, you could piss the seller off, and that's great. But ultimately, if they're motivated to sell that property, and you could make an offer, 10, 12% under list price, and they might tell you to F off, and in 3 weeks give you a call and say, is that offer still on the table? Because if it is, we'd really consider it at this point. So,
right.
Shoot your shot. That's for sure. That's probably a good point of view. Well, I appreciate you guys all watching. These are my son's headphones because I have I've got my microphone on, and so I had to have some headphones to be able to listen to Caleb as joining me today. And so I got my little baby headphones on. Good thing I have a small head. But anyways, appreciate you guys joining, watching in. And Izzy's video is going to be released today, living in Berthoud, Colorado. So if that's something that you're interested in, it's a great small town just south of us, south of Loveland. Otherwise, you guys have a good rest of your day. Caleb, thanks for joining me, man, and sharing your experience and expertise.
Awesome. Thanks for having me. Take it easy, guys.
See ya.